Hi, I'm Max Keiser. This is the Keiser Report. So much that we really don't need. That's what this whole lockdown is teaching so many millions of people, that most of their lives were wasted on stuff that's unnecessary, costly, redundant, and doesn't promote social good at all. NBC, MSNBC, CNN, suckers. Don't forget Disney. Oh, anyway, I digress. Yes, Stacy.
Let's talk about mortgaging our future, because this is something that you and I have been talking about here on Keiser Report for years. Of course, all of this debt and all of this fiat since 1971 has come at some cost. We feel like it's been costless because money printer go brrr, so they could keep on printing, and we think like, hey, I can keep on buying stuff. I could buy a new SUV every year, put it on lease. I could buy a bigger McMansion every year, and it's going to be better and better and better. Well, it's actually been mortgaging our future, which is one thing if it's mortgaging your own future, but it's been mortgaging those who have no choice. You've been mortgaging the future of people who don't have any say in it. We're going to get to that. But before then, I want to talk about this quarantine situation, because we're in this global quarantine. And somebody mentions, great interview, quarantine Max Keiser is best Max Keiser. And that is something true, because of course, Corona means crown, Keiser means king, Max means king. You're Max Keiser, the king, 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 king.
I am Satoshi's representative here on Earth. I am the Bishop of Satoshi.
Okay. Well, if that's what you believe, but the thing is, you can make whatever you want of the situation. It is a dire situation, and it is a global economic
Well, let me just jump in here for a second, because we have in now stark relief, and we have it slapping us in the face, like that GIF of the woman getting hit in the face with a trout during a storm, that everything Paul Krugman has said about debt is false. He's always saying it's just debt we owe ourselves and we can ignore it. Well, what happened, Paul Krugman, is that suddenly the debt became a problem, didn't it, a few weeks ago, and the globe goes into discounting and realizing all that future revenue and future that you decided was not important, and all those generations that you decided were not important, suddenly everyone's jobless and without food to eat in many places because of the economics espoused by charlatans like Paul Krugman. I'll say that.
And why does money printer go brrr? Why does that happen? Why does that keep on happening? And why does every single time since 2000, 2008, and now 2020, why is it that every time they do this, that the wealth and income gap explodes, especially between generations? You see that between income classes, but you also see it between generations. And you see millennials get left behind further and further, where Generation X was at the same age, and of course, where the boomers were even more so at that same age. So why does that keep on happening? Well, because they have to keep this debt Ponzi scheme alive. And that's why we keep on having to mortgage the future, because those current members of the Ponzi scheme can't keep it up. So they need to go further and further out into the future. The state of the consumer, nearly a third of U.S. renters didn't pay April rent. So this is really the base of this pyramid of debt. If those bottom layer of renters can't pay the mortgage, the rent to the mortgage holder, the rentier class, that is what unwinds the entire global pyramid scheme.
Right. The pyramid scheme has a few layers, and if people are not paying their rent or their mortgage, and a third are not going to do so apparently in the month of April, that is like pulling the rug out from underneath this enormous Ponzi scheme in a huge way. And it also, I think, echoes the Occupy Wall Street movement, because during the Occupy Wall Street movement, there was, a belief by this generation, the millennials and the Gen Z, that Wall Street was abusing them in some way. And they wanted to make the message clear that they weren't going to abide by the money printers and the Ponzi scheme operators, but it was an abstract concept. Now, in 2020, it's real. I can't pay my rent. So now that Occupy Wall Street movement should really become more I should say, pronounced as it becomes part of the global insurrection against banker occupation that we've been talking about for 10 years.
Well, it's basically Occupy debt. I think there was a subset of Occupy Wall Street that because the debt has occupied them, it's occupied our economy and our infrastructure and our supply chains. And this is what is coming unglued as we try to maintain this system. You know, we have all these senators and congresspeople plugging the holes of this debt system as they emerge. I mean, we're on phase 4, another 250 billion plus, oh no, another 500 billion. So we're continuing to plug in these holes of the debt tsunami as it unwinds. 30% of mortgages could default, and Fannie Mae and Freddie Mac could require another bailout like the Great Recession if lockdown stretches into summer, warn analysts. As many as 30% of Americans with home loans, or some 15 million households, could default if the nation's economy remains closed throughout the summer.
Right, well, let me speculate on something, because this Fannie Mae, Freddie Mac bailout, another bailout, before they even pay off their first bailout, or during the total recapitalization or reorganization or collapse of that Ponzi scheme that is Fannie Mae and Freddie Mac, if they have to go through that again, I am making this prediction, and I've been saying this for a few years, but I think this could actually happen now, that actually Fannie Mae, Freddie Mac is sold to People's Bank of China, PBOC, so that China effectively becomes the landlord for a third of American households, number one. Number two, we could see another mega deal like Exxon sold to Saudi Arabia. I think we're going to see some mega deals like that as part of the New World Order. Finally, I mean, I bet this is a bit kind of a stretch, but I think that Alaska could be sold to Russia.
Well, I don't know about that, but certainly they're predicting that up to 15 million households could default on their debts, on their mortgages. Nearly half of all U.S. mortgages are underwritten by Fannie Mae and Freddie Mac. Remember, leading up into the 2008 financial crisis, there was this theory, this argument that we're not going to bail them out because they're not nationalized, right? The government doesn't stand behind these bonds. And at that time, China was one of the biggest holders of those bonds. And they said, well, you better buy these bonds and bail out the system. And lo and behold, they did at that time. There was a big theory, and a lot of people out there in the audience who might be Generation Z don't remember the last crash because they were only like 12, 13 years old. But at that time, there was a theory that China would take over the whole thing, and then there became a national security issue. But in terms of this situation, we have 50% of the mortgage market is basically underwritten by the United States government. About 60% of all health care is underwritten by the U.S. government through Medicaid and Medicare. 90% of student loans are underwritten by the U.S. government. So the fact is, we have over the past 20 years, especially since this hardcore financialization that happened since the Commodity Futures Modernization Act of 2000 and the Glass-Steagall repeal in 1999, basically a continuation of the last episode where we talked about the bankers get all the reward, everybody else gets the risk. This is part of that, is that we've had, because society, ordinary people take all the risk, that we've had this offloading of everything onto the U.S. government, and nobody seems to have realized that the U.S., we are close to what the Soviet Union was like, or China, as we say, you know, that they're communist.
Yeah, let's call it what it is, Marxist communism. You know, Bernie Sanders is a socialist. He would be too liberal compared to the communism that's being put forward now. I mean, you talk about 60% owned by the government owns student loans.
They own 90% of student loans. They pay over 60% of all health care spent in the United States, $3 trillion, $4 trillion a year. Most of it comes from Medicare or Medicaid. So they're the ones paying for that. The government is already paying for it. All these other schmucks like us and caught on Obamacare, that's like just money being thrown out the window. It's like money printer go brrr.
Right, so that trend is going to 100%. Right, and if they keep going into debt and printing all this money, and the balance sheet of the Fed goes from, you know, with the $5 trillion on their balance sheet, which is 25% of America's GDP, if it goes to 100% or higher, that's $20 trillion of debt. So the central bank would effectively own the healthcare system, the education system, the mortgage, the entire mortgage market, and own at least half of the S&P 500. So that's a deeply centralized Politburo type Soviet Union communist trifecta of stalemate.
In terms of mortgaging your future, you know, somebody's got to pay for this, right? The money printer's going brrr, right? That's happening, but somebody's going to pay for it. It's, as we've covered, you know, it's the future generations, or it's those, you know, the opposite side of that is the consumer, the citizen, the resident, the user of these systems, the entrepreneurs. Their money printing goes, it just burns in thin air. It just evaporates. Look at what they're predicting in terms of just the deficit, the annual deficit of the U.S. government. I mean, I remember when it passed $1 trillion. I think that was during the last financial crisis. Well, look at these numbers. They're pretty shocking. Bloomberg Economics expects largest U.S. deficit since World War II. Tax cuts and spending measures already announced will result in a budget deficit greater than $2.4 trillion this year. Upcoming measures are likely to push that toward $3.5 trillion, or 16% of GDP, easily the largest as a share of the economy since 1945.
Right, so let me reiterate here. So the idea that debt is just money we owe ourselves and that we shouldn't worry about it, as you read in the New York Times, Nobel Prize-winning economist Paul Krugman, he thinks this is a good idea. He thinks this is the right way to go. He's obviously pro-communist, which is weird because he lives in America.
It's like Marxist capitalism. It's a new form of capitalism. It's a crony, kleptocratic, communist sort of Marxist
It's a rebranding
capitalism.
of communism. This is American communism. Remember that show, Love American Style? It's going to be communism, American style, and it's going to be like people trapped on a Carnival cruise line with coronavirus out there in the middle of the ocean, trading food stamps with each other to try to make enough to click an ad on Facebook to win a protein pill.
That is a very accurate way to describe it because, of course, none of those cruise lines at all pay taxes in the U.S. They're all registered in the Bahamas, and yet who has to bail them out? Not the Bahamas, of course. The Bahamas can't bail them out because they can't print their own money like the United States money printer go brrr and can. So they're being bailed out essentially by the U.S. taxpayer. What happens when all their cruise line, people on the cruise line, the passengers, when they come down with coronavirus, they pull into Fort Lauderdale or Miami, and our healthcare system has to take care of them. I do want to point out that on this this deficit widens the most since Second World War. That little orange line there is the members of the public who own that U.S. debt. Who's buying it? Well, it's called monetization. It's called nationalization. Just like we own 90% of our student debt, 60% of our healthcare debt, and 50% of the mortgage market, we own 100% of the national debt.
They should call them Travis Bickle bonds, where it's just like Lloyd Blankfein standing in front of the mirror saying, who are you buying the bonds? You buying it for me? You buying the bond for me? How about me? You buying the bond for me? Travis Bickle in Debt Pusher, the new Martin Scorsese film on Netflix. Or, you know what? I think we got to make a Charles Bronson remake of Death Wish and call it Debt Wish.
I believe I've seen you working on that and speaking to a crazy director.
Abel Ferrara. Abel Ferrara said he would direct me in Debt Wish, and I'm the natural successor to Charles Bronson. It's a vigilante banker dude in New York City who goes crazy and seeks justice. It's like Occupy Wall Street meets Godzilla.
But Max, in terms of these, this mortgaging the future, at least there was a semblance of a future back in 2008. And there was much more of a future back in 2000, 2001 during the dot-com crash. Now, like the notion of having some sort of future becomes more and more precarious and like doubtful about whether or not this, this empire of debt can sustain itself with more money printing. And of course, you see that in the reflection of all these so-called bailout packages and stimulus bills, is there's no oversight and it's just being handed to who knows who on Wall Street or CEOs or lobbyists. We don't know where it's going. So, we've got our flamingos back here and we've got
Tomorrow is guaranteed to no man. I think it's a Shakespeare line from Macbeth, if I'm not mistaken. Of course, I'm completely mistaken because I have no idea who said. Hey, you know what? We got to take a break while I consult my complete works of Shakespeare. And when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Lina Seiche. She's the marketing director of BTSEcom. Lina, welcome to the Keiser Report.
Hi, thanks for having me.
Great to see you. Great to have you on. Now, Lina, how does BTSE differ from other Bitcoin exchanges?
Well, yeah, there are a lot of Bitcoin exchanges out there right now. So I think that makes it more challenging for every exchange to differentiate themselves. As for BTSE, actually, we say that we're a financial tech company and we build financial products for institutional and personal use that either use Bitcoin tech or build on creating more accessibility for Bitcoin. because our team is very bullish on Bitcoin. So we believe the new financial standard is going to be built on it. So we still see a big blue ocean when it comes to various financial applications. So that's what we set out to build. So our flagship product is the BTSE Exchange, which is a spot and futures exchange with fiat on and off ramps. And in addition to that, we have other services like OTC, asset management, lending, and the BTSE debit card, which is coming out soon.
Yeah, that sounds like a pretty full range of products there. Let me ask you this: the pandemic that is sweeping the globe. What have you been seeing in terms of volume on the exchange during the pandemic? And there's a lot of money printing. There's money printing insanity all over the world. How is that being reflected, if at all, on BTSE?
Actually, the first thing we saw when the market crashed big time was that people stopped trading high risk. So we saw people sort of escaping the futures trading and moving to stablecoins. And a few people did buy the dip. And then as Bitcoin started recovering rapidly, now we see a lot of interest coming back and a lot of people buying into Bitcoin.
Right. So the Bitcoin halving is only a few weeks away. So the mining rewards drop from 12.5 to 6.25 coins every 10 minutes. This is an event that occurs every 4 years. And all the Bitcoin traders around the world and those who have been following Bitcoin and crypto have been waiting anxiously for this. It's a seminal moment every 4 years when this happens. And what are you expecting, if anything, from this? And can you just talk a little bit about it?
In regard to my expectations, I think in terms of short-time price movement, I have no idea. It could go either way. We do have some data that we could go by based on the last two halvenings that could give an idea. But I'm not going to go and make predictions based on that because we had two halvenings or halvings, and we're in sort of a special situation right now. But what I do know is that Bitcoin is unlike anything we know today and we're used today when it comes to money. It's a disinflationary asset in a world of hyperinflated, unlimited fiat. So our central banks quadruple our money supply, and in the meantime, Bitcoin is becoming scarcer. So it would be very hard to believe for me that an event like the halving that halves the production of Bitcoin would not significantly push the price in the long term.
Right. Let me ask you this, Lina. The Bitcoin community is very active and traveling all over the world all the time and meeting at conferences. And I've seen you at conferences over the years. And now during the coronavirus pandemic, these Bitcoin conferences have been put on hold. And the community is not experiencing what this camaraderie, if you will, of all these events happening all the time. You're very close to the community. You're in marketing over there at BTSE. How do you see this Bitcoin community at the moment? Is it evolving with the times? How do you see that, if anything?
I think generally, because this community it was born online and it's living online in terms of the communication, not much has changed aside from the fact that everyone is getting tired of being stuck at home and getting a bit frustrated. But aside from that, I think one thing people are seeing is they have a lot of time to watch what is happening in the markets. And a lot is happening economically speaking. We can follow things as they happen day by day. And we see more and more reasons every day why Bitcoin makes so much sense to us. Just looking at how we can probably expect cash to become less and less used, and this is kind of being spurred on by the pandemic, it shows even more why Bitcoin is important.
Right. It's remarkable how every market in the world seems to be more volatile than Bitcoin. Certainly the oil market and the stock market are way more volatile than Bitcoin recently. Now, Lina, privacy has become a very big issue. What is BTSE doing in terms of privacy, specifically with Taproot? And if you could maybe explain a little bit about Taproot.
Oh, in regards to Taproot, I think you're saying that because we published some content on our BTSEcom. I think we like to educate on the BTSEcom about the privacy developments in Bitcoin. So we do have our eyes on that. Generally, right now, what we do at BTSE is we listen to what users want, and we do see a lot of demand when it comes to privacy. So what we are doing is, for example, BTSE listed a privacy coin when other exchanges would delist privacy coins, and we also do not work with chain analysis companies. So we do not track, block, or flag coins that, for example, come from CoinJoin addresses. And additionally, we facilitate confidential transactions through the Liquid network.
Right. The chain analysis companies that are active now are forensically going in and tracing and tracking coins. And there is a controversy in the community, and a lot of people believe it's against the ethos of Bitcoin in a big way. And one thing I know is that the cypherpunks that would be, of course, against this, their prevailing vision always seems to win out in the end. Now, you are the chief, it says here chief shill, I don't know if that's the right phrase or not, for the Liquid network. So tell us about Liquid network. Are you the chief shill? And is that a pejorative term? It sounds bad. Or is that not bad? Is it so bad it's good? Lina.
Yeah, maybe I'm the chief shill at BTSE. BTSE is a launch member of the Liquid network. So Liquid is a federated sidechain-based settlement network. A sidechain tech is pretty cool in that it essentially allows you to adjust or add functionality to Bitcoin without ever touching the Bitcoin protocol or the Bitcoin network. So in the case of Liquid, that means Liquid has a native asset called Liquid Bitcoin that is pegged one-to-one to the Bitcoin main chain. So what you can do basically is move Bitcoin from the main chain to the Liquid network, which means you lock Bitcoin on the main chain, you unlock it on the Liquid side chain, and then you can use it with the added functionality that Liquid provides if that is useful for your specific purpose. So Liquid is designed for traders and exchanges, which is why it makes a lot of sense for BTSE to use it, because it has faster transactions, confidential transactions, so that makes a lot of sense. Let's say you're a trader and you want to catch a trade, and you have Bitcoin in your wallet and you want to move it to the BTSE exchange. Now, normally you would have to calculate a certain wait time, like probably minimum 30 minutes, because of Bitcoin's 10-minute block times and the fact that most exchanges require a minimum 3 confirmations before they will credit Bitcoin to your account. And that doesn't even take into account that blocks sometimes come not every 10 minutes, but slower, or that it's not guaranteed that your transaction is going to be included in the next block. So for some traders, that might be too slow. And Liquid can fix that because it has 2-minute transaction finality. So what you can do is, if you have a Liquid-enabled wallet like Blockstream Green, you can very easily send Liquid Bitcoin from your wallet to the exchange within 2 minutes, which is more secure and faster and more convenient.
What you're describing there is scaling the Bitcoin protocol. And for years, we've been told that you can't scale Bitcoin, and that's the justification for all these so-called altcoins that can do stuff that Bitcoin can't do. If I were to say that it seems now that Bitcoin is just about going to be able to do everything any altcoin could ever promise to do, and that the altcoin market is almost entirely redundant and unnecessary, would you agree or disagree with that?
Yeah, I think Bitcoin can do everything. The thing is, when you build on Bitcoin, often, like with sidechains, there's less immediate financial incentive. So that's why there are a lot of altcoins out there. But you can do everything on Bitcoin, and I think you should.
All right, so finally, let me ask you this. You apparently, I would guess, are either Generation Z or a young millennial. And as the boomer fiat Ponzi scheme collapses around us, and that meme of printer go brrr, and it's obvious that the boomers have just created fiat money for no real reason other than to steal wealth. Are you confident that this new monetary paradigm of Bitcoin is going to be a foundation to build your future on, and do you have hope?
I have a lot of hope in Bitcoin. I have little hope in fiat. And I wish more people my age could see that now. And I think more people will be able to see it in the near future, especially with what is happening right now. And what is also interesting to think about is that already kids are born, or there are kids that are 10 years old today that don't know a world where Bitcoin did not exist. So I think it's here to stay longer than fiat, much longer.
All right, Lina, thanks so much for being on the Keiser Report.
Thank you for having me.
All right, well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Lina Seiche. That's spelled S-E-I-C-H-E. She's from BTSEcom. If you'd like to get in touch with us on Twitter, it's Keiser Report. Until next time, bye, y'all.